What up, what up, what up, what up, what up? What up, guys? How are you? Good to see you. Paul, can I hear you there? What's up, bro? Oh, and he's... Paul, you're silent again. Check your... Oh, there you are. I hear you, Paul. What are you eating? What is that sound, Paul?
Oreos I'm eating. Listen, what do you want me to do about it? It's part of the thing about being in another country that there's houses around us. I can't stop their staff from working.
No, I'm talking about you eating Oreos. Welcome to the show, everyone. I love you. I love you. Guys, you're incredible. Paul is in Mexico. I'm turning 40 tomorrow. There's a lot of great things happening, and we welcome you into our live streams every Tuesday and Thursday at 1 p.m. Eastern. Yes, Paul is in his beautiful Mexican mansion. Look at that sunshine on those palm trees. That's incredible. I'm in Ohio with 6 feet of snow out front, Paul. I welcome you in. Trader Mo is here. Mo, where are you? Where you at, Mo? You in here?
What's up, guys? How are you?
Mo is going to go over charts and tables today in terms of momentum and day trading. We'll get back to Trader Mo. We love you. Folks, again, a wonderful thank you to all of our new subscribers. It's been completely absurd. Paul and I, beyond our wildest dreams, over 18,000 subscribers. The Patreon count is inching toward 1,000 patrons. And so we have so much in store for you today. We are looking at pharmaceutical companies today. Paul, this is not your favorite sector. You don't often go after some of these companies, but I know Trader Mo went to med school and he is definitely interested in this. Mo, don't you fly across the normal world? Don't you fly across the world and go to seminars about these companies? Pharmaceuticals? And he's not hearing me, Mo. I love you. Sorry about that, guys. Again, we're working with Mexican Wi-Fi and we're working through it. Paul, you can hear me good.
I hear you,
right? Great. Oh, I hear you, Mo. Great.
Yep.
Yeah. So guys, what we're going to talk about today, there's some companies, Paul, I did some research on these. A lot of them have some very nice PE ratios off the start. I think Gio was next to me researching these companies, and he said that you might like some of these. GlaxoSmithKline, Coherus BioSciences, Lifevantage Corp, Sanofi ADR, Vertex Pharmaceuticals, Bristol Myers Squibb. That was Paul's maiden name, Bristol Myers Squibb. And Regeneron. We're going to look at Regeneron. Obviously, Regeneron was in the news. Folks, I don't know anything about these companies. I think if you've watched our channel, that's probably pretty good. We want to find undervalued companies that maybe not a lot of people have heard of. Keep away from some of these hype stocks that everyone's jumping into. And so that's what we're going to go over today. We'll use our 8-pillar analysis. We'll take questions from you. All of this in store over the next hour. Paul, how are you? I'm off the chain today. How are you doing in Mexico?
I'm awesome. Why are you up the chain, bro?
Well, I'm excited for the live stream. I mean, I wish I was down there with you, but I'm excited to get after these companies. I'm excited that so many people are watching right now and the comments are flying in. And of course, the patrons are very thankful for what they're getting on the Patreon page. So we're happy to see all of our OG homies in the chat as well. And David said mandatory AbbVie analysis will happen today, of course. Great. Paul, all right, Paul, you want to get after it? Anything to announce on your end, Paul? What's going on?
I don't think so.
Great. Good update.
Don't waste all your games with those cookies.
Yeah, don't let me interrupt you. You're eating. Yeah. Tomorrow's a big day, guys. 40. Oh my God. Okay, here we go. Paul, why don't we get after our first company, which is GlaxoSmithKline. This is a British company founded in 2000. It's the 6th largest pharmaceutical company in the world, known for their malaria disease. Now, Paul, we've talked about fraud in the past, and I read up that this company is overcoming a fraud case in 2012, which ended in a $3 billion settlement, the largest of its kind. I think they were bad boys over there at GlaxoSmithKline, and let's take a look at what they're doing nowadays.
What is the fraud?
I think they were promising that some of their drugs could do things that potentially maybe it couldn't, and misleading perhaps investors and takers. But this was almost 9 years ago now. But it seems like they've been recovering ever since. So, shall we get after it?
Yeah, you're gonna share. I have my screen shared.
Yep, here it is. The ticker symbol, guys, is GSK.
Remember, guys, we're using the 8 Pillars website right now. This is only in its beta form. There will be errors. I found an error on a video we just did before the live stream. There will be errors. It'll be available to you guys on April 15th. There will still be errors after that. But right now, I just want to show you guys how awesome it's looking. So GlaxoSmithKline PLC. All right. So the company is currently trading around $35. Market cap, $90 billion roughly. PE ratio, good start, 15.5 in the last 12 months. That's awesome. Profit margin, 16.9%. So we have 2 check marks to start. I'm actually surprised that this gross profit margin isn't higher, because I thought drugs would be like 80 or 90% gross margin stuff. Because I mean, once you make them, what does it cost to really do it? I mean, unless they're, I don't know why it's that low. I would have thought it'd be higher. Wouldn't you have, or no? Am I wrong?
We did a couple companies before. Obviously, I get confused with software sometimes because their profit margin is so high. But yeah, I mean, you're right. I'm not in tune with the how they replicate their drugs and how they sell them, but it does seem low.
Yeah. So either way, dividend, big dividend here, 4.5%. So that's what? So 5% would be 4.5 billion. So 4.5%, call it $4 billion. Now it's actually a little bit more than that. So let's just call it 4 billion to make it easy. Now here's something I've added here, guys. The free cash flow here in the last 12 months was 5.88 billion. So you're going to have a lot of metrics on this main screen that are going to be immediately available for you to look at. So right now we know in the last 12 months that their 4 point whatever $billion dividend is covered by the free cash flow, but not by a ton. But that's fine. So right now we have 2 check marks. We have a PE below 20 and a 16.86% profit margin.
Yeah, pillar number 3 is revenue growth over the past 5 years. Revenue growth is pillar number 3, Paul.
So the revenue growth in the last 5 years, 27.89 to 34.1. So check mark there.
Check there. Great. How about profit growth is pillar number 4, Paul?
912 million to 5.75 billion. That's a big jump. They had a big drop in the 2015 year. So, yeah, just a check mark there either way.
Pillar number 5 is shares outstanding. Paul, Don was saying my mic might seem a little groggy, folks. If my mic is groggy, it may clean up here in a little bit, but we'll keep going, guys. Let me know if it sounds like poop. Yeah, pillar number 5 is shares outstanding. Paul, we want this going down, baby.
I'm actually surprised to see this. Every year it's been going up. 9.72 billion to 9.95 billion. I'm actually very surprised to hear that and to see that. So anyhow, balance sheet. Quarterly balance sheet. Current assets.
Yep, that's right, Paul. This is pillar number 6, current assets over current liabilities. Keep going, babe.
20 billion versus 22 billion. Another X, my friend.
Oh, boy.
Another X.
That's interesting. So we have 4 straight checks and now 2 straight X's on shares and current assets. Pillar number 7 is free cash flow growth. This is their cash from operations minus their capital expenditures, Paul. And, of course, this is one of your favorite pillars.
Yeah, and we did something new to this one, guys. We actually put in the free cash flow underneath the capital expenditures here. So you'll see before we would take free cash from operations, we would subtract out net capital expenditures. We'd wait for Seth to find his cell phone, type in a couple numbers wrong. I would do some mental math, sometimes get it wrong. David Spicer would kill me. It would be a long fiasco. So now he's made it a lot easier. So 2.67 billion to 5.88. So definitely a check mark there.
Paul, Dr. Dathy.
Like go ahead.
Oh, Dr. Dathy is saying they released 9 drugs in 2020.
Holy cow. Did they really?
Yeah, that's incredible. Yeah.
So remember, guys, what he did, what we just do, when we do the 8 pillars, we're looking at the high level. We're not looking at in-depth analysis. I didn't even know they released 9 drugs, nor did I care off the dribble. I want to look at the high level and say, is this even a company I want to look at? I like the PE. I don't like the shares outstanding, even though they weren't going up a ton, 3 or 4% total. I still want to, this free cash flow, I like. What's the average free cash flow, Seth?
Yeah, so I do like this nice, growing, steady free cash flow over the past 5 years, and the average is 5.
So 5 times 20 is $100 billion. Just like the PE, we want to be less than 20. Their price of free cash flow is less than 20. So that's pretty solid. This is a company to look at. So there's 9. So then, like they said, the doctor said they released 9 drugs in 2020. The thing to understand is, what are those 9 drugs? Are they in big markets? What's the potential revenue growth from that? What's the potential profit from that? What's their future over the next 4 or 5 years? What's their future growth in terms of revenue, in terms of the pipeline? Do they have a lot more like Biogen? Biogen's going to suffer in the short term. But in the long run, they have a lot of drugs in the pipeline, which will make the next 3 or 4 years pretty solid. So same thing here. You have to ask for GlaxoSmithKline. What's going on with them? Do they have enough? I don't like the fact that their dividend takes up such a big chunk of their free cash flow, though. That does bother me. It's a huge chunk of it.
Yeah, that dividend was 4.5%. Paul, going back, what was the market cap for this company, and what was the market cap you just came up with?
I came up with 100 billion, 5 times 20. The market cap here was 89, so it's a check mark there.
Oh, okay. So Paul, so you're in. Okay, so the free cash flow is telling you that this company is somewhat undervalued. Would you say, Paul?
It's within the realm of possibility. If you look at my sheet here, guys, the other great thing about look at our software. it gives you the 8 pillars here and tells you the check marks and X's, which matches up. We had shares outstanding was increasing, and assets over liabilities was negative. But here, I'm looking at saying, listen, it's worth further investigation in terms of biopharmaceuticals. Do they have growth potential? Releasing 9 drugs in 1 year, that's pretty impressive. So you want to see how that's going, what's the future projection for it, and what else is in the pipeline to add to that.
Yeah, Dr. Dathy's also saying that they're dropping their dividend in 2022. How would he know that, Paul?
Probably just by Googling. And by the way, guys, for those of you who are upset by that, don't be upset by dropping the dividend. If they're going to use the dividend to do things like buy back shares of an undervalued company or do more for research and development, you want that in a company. You don't want just a company that the only time you want a company paying you a dividend is when they have no other good use for the cash. Yes, everyone likes getting a dividend. I like giving dividends, but you want it from companies that are not getting a good return on their invested capital. So you might want to look at their return on invested capital to figure that out. I think we have that on the main page of our metrics. Do we have that? No, return on assets we have, which is 28.92. Guys, they do a really good job of making money on their assets. That's really solid. That's a really, really solid return on assets.
Paul, we got a great question here from Matt. Matt says, do you weigh those 8 pillars? Are some pillars more important in your eyes? Is there one pillar that's most important? Great question, Matt.
Great question, Matt. I tend to go to the free cash flow numbers the most. Some are not as important as others. That's the thing, Matt. I'm not trying to look at it as, I look at it as a whole picture. Okay, what are these 8 telling me? I have ignored companies that have 8 check marks, and I've invested in companies, or I've done more research on companies that are intriguing that have only 2 check marks. It's about looking at what those check marks mean. And the more and more you watch with us, you'll get a feel for, okay, these are going to answer some questions. These are going to sit there and tell me what questions are answered and what questions do I need to ask to do more research. For me on GlaxoSmithKline, this is the check marks are telling me, Paul, do more research because this is a very interesting company that you'll want to understand more of. Yeah, Paul, I thought they were lowering the dividend, not dropping it. It's a pretty extreme thing to just drop it completely.
Paul, John is asking, what do you like to see for good return on assets? Do they cover that in security analysis? Is this off topic?
No, security analysis doesn't discuss it. Return on assets is very easy. It's their net income divided by their assets. It's basically saying how well do they use their assets to make more money. I'd like to look at the average, Seth. If you could, I can give you guys the average in the stock market right now. I don't have that in. The 8 pillars app, but I can use it in my white charts. Which, by the way, I'm going to keep white charts for things like this. So let's sit
Paul,
there.
if you like, I can jump over to Trader Mo if you like.
That's a great idea.
Mo, are you there?
Yes, I am.
Talk to us about GlaxoSmithKline.
Okay, so first of all, I can't remember who said it. He was a PhD who said 9 drugs were released. I'd like to know if that's actually 9 drugs released or if they had 9 trials go underway. That's what I'd like to see, because 9 drugs released in a year sounds like a lot. Right now they have 21 trials in phase 3/phase 2. So they have a big drug coming for multiple myeloma soon that has some bad side effects right now, but we'll see. They're an interesting company. So based on a chart, though, they are definitely in a downtrend right now. And we can see that when I talk about this 50% rule of you take your high and your low and your middle, you can see this is a big resistance level for them. So they're having a difficult time getting through all of these moving averages. It's going to take them a lot of positive volume over a very long period of time to get up to this $42 range. If I'm trading this right now, well, I'm not trading it right now just because it's too much. They're in a downtrend. They are getting to the bottom. If they can coast on the bottom here and we can have what's called a dog stock, throw a tracker share on there, see what they can do over the next couple of months or so, that's the only way I would play them. But if I had a choice right now, this is something that I would stay away from.
All right, Mo, thanks so much. Paul, what'd you dig up there?
Return on assets are very low for most companies. So this is a high number. We want to sit, and I want to make sure that's actually right from the data. This is part of the issue why we do the beta test. But the one I like the most is return on invested capital, which I'm going to add to our metrics. It's return on invested capital is how much money what's the return are they getting on every extra dollar that's invested back in the company and retained in the company. So we'll do those things. Remember, no metric in and of itself. I believe return on assets is the metric that the book that beats the market looks at in addition to earnings yield. So no individual metric is the metric you should look at. This answers both John's question as well as Matt's question. It's more of, again, looking at the whole picture and saying, what is this doing? Is this company a financially good company? Is it not, et cetera? So I would wish I could just answer and say, yes, only look at this one. But I do like price to free cash flow and growing cash flow.
Okay, guys, that was our take on GlaxoSmithKline. We did our 8 pillars. They were great with PE ratio, profit margin, revenue, and profit growth. They're selling off shares, unfortunately. Assets over liability was bad, but their free cash flow is wonderful, and their price to free cash flow is under 20. It's a good company to look at, Paul. I thought you'd be interested in this. With a 4.5% dividend, it's definitely interesting. So that was GSK. Folks,
and remember, guys, this software is available if you sign up. We sold out of the $12 Patreon already. If you want the $13 Patreon, go sign up now because there's only going to be 250 spots for that. I think there's only 230 remaining. So it went by very quickly. I think it was a matter of a week and a half, and it was gone. So don't be penny wise and dollar dumb, guys. Go get that. You'll get all the software except for chart reading as it grows for free. Not for free, as long as you're a Patreon member.
Paul, here's a great question. I know you've said this. Fathead Beats says, Uncle Paul's mentioned that he doesn't use the 8 pillars for energies, utilities, banks, insurance companies. What other ways do you value them, or do you just avoid them? Great question.
Great. I do avoid them. Banks, I know a guy who's a very good bank analyst. I'm trying to learn from him. It's kind of gone to the wayside, but I would use him as a resource. I just avoid them completely, only because there's so many companies out there that I can understand, that I will be able to understand. So why enter these ones? I mean, I leave it to, I'm very big on focus on your sphere of influence, and those companies are not in my sphere of influence yet.
All right, guys, great questions coming through. Benjamin said the last company, GSK, he said that the fact that less than 12% of shares are owned by institutions making me stay away. What does that mean, Paul, to the layperson like myself?
Maybe so, but I would actually disagree with that one. Ben, would you please expand on why you don't like that 12%? Because to me, that says, first off, I don't think institutions are the smartest investors out there. Secondly, when they finally do like the company and they start buying, that's gonna be a lot of volume that can drive the price up very quickly, I would think. So, maybe you want to expand on that more?
Yeah. People are asking about the Paul. People are asking about the Patreon, guys. We're trying not to push it as much, but the Patreon levels, we're creating 250 member groups in the lowest level. When the group fills up, the price goes up a bit. Not for patrons. Whatever you're paying now, folks, that's what you're going to stay with, minus general inflation fees that might occur over the years to come. But yeah, so the Patreon groups, once they fill up, will go $12, $13, and keep going. The middle tiers get access to Trader Mo. Literally, you get to hear all of the day trades and options option trading he does. And then the top tier gets both Paul and Mo. And so, Paul, let's keep going. Paul, should we keep going on the next stock, you think? Any other questions out there, guys?
Good.
I love you. Okay, here we go, guys. Thanks so much, everyone, for watching. I would say, folks, with the most sincere heart of hearts, with 230 of you watching and only 66 thumb tickles, we need a little more love. Paul, as you know, is like a middle school girl. He needs his Instagram and TikTok thumbs up, and so please delight him with tickling his little white pale belly there, like a Care Bear. Okay, Paul, should we get going? The next stock is Coherus BioSciences, Paul. Coherus BioScience. This is a California company, a leading biologics company, delivering biosimilar therapeutics, whatever that means. That's what they're up to, Paul. What is the market cap for CHRS?
Okay, $1.3 billion. It's not even right now. It's about $18 a share. Last year it hit a high of $22.50 right before the crash. Got as low as $11.67. Wow. PE 8, very low.
Very
high
nice.
Profit margin 33%. Really high gross margin. Love it. No dividend, and the last year is on $121 million in free cash flow. So just in the last year, it's only selling for 11 times free cash flow. That's a nice little metric there.
Pillar number 3 is revenue growth, Paul.
Okay, I don't know why in 2018-19 they had no Wow, they had no income that year. That's interesting. So 199 million to 489 million. So that's a check mark there. Profit went from a loss of 103 to a gain of 162. So that's a check mark. But look at this, guys. It's losses along the way. This immediately tells me, it's such a small company. Now maybe, one of the things to look at is this most recent year a breakout year for them? Are they going to have steady profit and steady revenue for the years to come and growth along the way? That might be the case, but if I see negatives the last 8 or 9 years, it kind of causes me to get concerned.
Paul, do you think? Paul, I'm sorry. Do you think that's your mic that's popping a little bit? Is that your hands on your keyboard popping, or is that you, Mo, moving around? I hear a little pumping and thumping, guys. So maybe just be a little cautious around that mic. I love you.
I think that might be everybody in the kitchen because I'm not doing anything.
Oh, okay. Interesting. All right, guys. Thanks, guys. Roberto asked again, guys. This is Coherus BioSciences. I don't know if I'm saying that right, Paul. John is joking around that we should do a whole show of just me screwing up the names of companies, which is hilarious. I assure you. So, pillar number 5 is shares outstanding. We obviously want these share number counts going down, Paul.
I don't have a mouse at everything money, but that's okay. Okay. A number of shares outstanding. This is awful, guys. 162 million to 283 million. That's terrible.
Oh, no.
Yeah, that's really bad. Number of shares outstanding. Total current assets, 726 million. Oh, wow. This is great. Total current liabilities, 548. So they have almost $200 million, $170 million more in cash than total liabilities. So check mark here by far. That's great. Makes the company a lot cheaper, but it's still number of shares outstanding just blow me out of the water. Cash flow, last 4 quarters. You guys ready?
Yeah, this is a pillar number 7. This is free cash flow. Go ahead, Paul.
Check mark from $196 million cash flow loss over here to a $121 million cash flow gain. There is no average because the average is negative, so we can't even look at it. So it's an X in the final one. So yeah, this is something we've got to. Yeah, it's these numbers are wrong. Okay, so I got to talk to our developer team on those 8 pillars. It's still inaccurate. So guys, on this company, this is about understanding the future of the company. What are they doing? What are they going to do? Because the last year was the best year they had by far. So is that sustainable? I don't know. That's what you have to figure out as an investor. If that's not the kind of work you want to do, I don't blame you, but then you have to find other companies that are probably bigger and more established, like I like to do, to figure out what you're going to invest in next. I'm not to buy a company like this, you really need to understand the future of it. And I don't think that we have enough information from these financials to understand anything other than you have to do more research on this company. Absolute must. You must do it.
Yeah, folks, that was Coherus Bioscience. We do have some great comments. Paul, Mo, would you like to fire up some momentum looking at Coherus?
Sure. Coherus is an interesting company. They're the leader in the world right now in biosimilars. So they're going to be, as of right now, they're the powerhouse. So we'll see what happens. But right now, this is definitely a downward trend. They had a snapback here the past week. So you can see that they were coming down through the sweet spot, and this is where you short the stock, and all of a sudden it snaps back on you. This is when people panic. This is when people get out of the stock, and just like that, it came right back down. So it's trying to break this strong support line dating back a couple of months. So you're going to need some good volume days to make this thing break through with some red candlesticks and force this thing down to the bottom. Again, this is not something that I'm willing to play from a chart perspective just because it needs too much volume, and I would rather wait for that volume to come in than be in the stock waiting for it to come in.
Yeah, guys, we got some great comments, Paul. Someone said Innoviva, and of course Biogen we certainly might be able to get to. We're going to stick to script here, guys, and keep going. Paul, what do you say?
That sounds great. Vinny's back. Where's he been?
Vin, love you, my friend. Yep, guys, the chat is filled. Folks, if you're watching all over the world, the chat is filled with a lot of our dear patrons, and they almost speak on our behalf, especially when we make mistakes on the show. And so if you guys have questions, you can certainly put them in the chats, and some of these amazing patrons will get to them. And Paul, one thing that we've developed over the Patreon, again, is this idea that, I share this a lot, but I felt very alone in my journey of investing. I felt clueless, alone, and I had to follow the crowd of hiring some financial advisor I didn't hardly even know. And so joining our Discord, joining our Patreon gives you that access to people who are incredibly intelligent all over the world and sharing sort of the same ideals that we share in terms of disciplined investing. So, Paul, let's get after it. Lifevantage. This company is out of Utah. Nutrigenomics, Science of Aging and Health. Their website was gorgeous, Paul.
What?
Lifevantage. Okay. The ticker symbol is LFVN. Lifevantage out of Utah, Paul. What do you think?
I think it's a $132 million company. PE is a check mark, 11.3. Profit margins. Look at this profit margin, 5% on 83% gross margin. That's pretty awful.
Why do you think it's so low, Paul? What are they up to?
I don't know. That's what I'm going to find out right now by looking at more financial statements.
So it's an X for profit margin, huh?
Yeah, it's an X for profit margin. 106. So small company and very little growth. Look at this: 167 million in 2016 to 176 million last year. That's very, very little growth. Net income, 5 million to 11.75. Still check marks on both, but it's very low.
Okay, pillar number 5. Yeah, pillar number 5.
Number of shares outstanding, 55 million to 57 million. So that's an X as well.
Oh boy.
Yeah, balance sheet.
Pillar number 6 is current assets. Yep, go ahead, Paul.
43 million to 22.45. The good news is they do have more cash on hand than total liabilities, which tends to be the case with these pharmaceuticals, especially the small pharmaceutical companies. So massive check mark there, which is awesome. Now the cash flow.
Yep, free cash flow.
$2 million to 14.8 million.
That's good.
So the average looks at about 5, 17, 30, 45 divided by 5 is 9. 9 times 20 is 180. So it should be. So it looks like a pretty good number. I mean, it looks like it's selling for a pretty good dollar amount. I mean, look at this chart here. It got as high in the last year as $16, and now it's at 9 and change. So, I mean, what's the reason that's the case? I don't know. But this is something to look at, because even though it doesn't have all the pillars, we want to make sure it's going well. It looks pretty good. I mean, from the financials of it, the shares outstanding, I don't think it was a big jump, was it? Do we remember? No, it's not a huge jump. They might have a reason why it's up 3% or whatever the number is, but I mean, this one doesn't bother me. It's just a very small company, so make sure that they have a lot of runway to them, and they're not going to be around. They're not going to be around for a short period of time.
Guys, this was Lifevantage. To recap, their PE ratio is in our wheelhouse. Their profit margin is unfortunately low. They have revenue and profit growth. Unfortunately, they're selling off shares, but their current assets are great. Their free cash flow is growing, and their price to free cash flow is under 20, which is what we want, giving us a desired market cap of 180 million and a current actual market cap of 132. Yeah, Paul, we're kind of this is good. Definitely interesting. The profit margin at 5 is a little troubling, wouldn't you think?
Yeah, I'm hoping that with the profit margin, it's some reinvestment back in the company, and with the gross margin, for example, if you have a really high gross margin, but you're putting a lot of marketing dollars in and a lot of research and development in, that's being expensed, then you're gonna take a hit on the profit margin, and that's the things you have to understand about why such a high because the only reason it would be is if there's a high overhead number. There's a high overhead number, though, that's not going to keep increasing as the company grows. It'll be increasing at a decreasing rate, which is awesome. So I think I'm okay with that low profit margin for now, if the story when doing more research is that it's because of how small they are. You know what I mean? Like, look at Dynasty Owner. We're 0%. We have a negative profit margin, but I have really, really high gross margin. So as we grow and get the volume, that profit margin will skyrocket.
Mo, what are your thoughts on day trading Lifevantage?
So this is an interesting one. You can see this is an example of a dog stock. So we've been on the bottom here below this 32% line, just coasting for about 4 or 5 months. And it just started to kind of pop up. So this is the reason why we buy a tracker share. You bought a share back here at, say, $14. And you're down to 9. So you lost $4 a share, but you waited and you kept it on your radar the whole time. Now we're starting to turn up and we're moving towards the sweet spot. So if you don't have a tracker share, go ahead and grab one and see if this thing can make some kind of run. There's a lot of resistance to go through with all of these moving averages and whatnot. But if we can get some good volume and maybe we can get a good run, take this thing back to I don't know, $13, $15, somewhere in that range. So this is a great example of why you use a tracker share. And if you want to do that, go for it in practice.
Mo, what is a tracker share again?
Tracker share is one share. So you go in there and buy one share and just hold it and see what happens over time. In worst case scenario, say you bought this at $15 and you're down to $9. So you lose $6 a share over a 6-month period. Not going to make you money, not going to lose you money, but it kind of keeps it in your portfolio so you see it every day and you don't forget about it. And all of a sudden the stock moves on you and you completely forgot about it.
All right, guys, that was Lifevantage. Paul, I think we're going to take a small break here. They'd like to see what shorts you're wearing, and people are wondering about your Mexico. What are you wearing on your? What's your outfit today? You're on vacation now, so of course you got the Tiger Woods. Now, is this his DUI picture?
Yeah. That's the DUI picture when he got arrested. By the way, does everybody know? I don't know if everybody knows this, but Mason, Mason is here. Mason's in Mexico with me. Should I show you Mason? Should we show Mason and get him all
show the view?
Right
show
now?
The view too, Paul. Show that view. Oh wow, Paul, look at that. So it's blown out a bit, Paul, but like what you're seeing there is a blown out Pacific Ocean and palm trees swaying in the wind. It's incredible. Yeah, great guys. Yeah, Paul is in Manzanillo, Mexico, on the west coast. The Pacific is right off the swimming pool, and it's incredible. We've done shows from there for the last couple years now, Paul. We go up and we do shows. It's been incredible. Okay, guys. Let me look at some other questions, Paul. I love everything that's going on, guys. You guys are incredible. Thank you so much for watching. Goldie says it's the Three Stooges. When I put this one up, Paul, it's the Three Stooges, and we know which one is Mo. That's hilarious. I love you, Goldie. Paul, you're the GOAT. I don't know about that. Let's see. Okay, guys. Okay, yeah. Well, actually, yeah, Dads is right, Paul. You guys are discussing merch out there. Talk about what you're thinking for the merch once we get this thing up and running.
Mason had 70. How many ideas did you have, Mason? Yeah, 70 ideas for merch. We don't want to do we want to have we want to do limited supply of merch. I don't want a whole lot of inventory. I want to have less profit margin. That way it just gets the merch out there. But in exchange for that, it's to be very limited supplies. We might bring out like 100 items of something. We're far away from doing merch stuff. We have to do a lot of back end things, get suppliers. So we're talking about doing it in the next 4 to 6 months. But the merch will be fun. There'll be things like golf balls, golf tees, putter covers, T-shirts, stickers, like the usual merch stuff. I thought about poker chips, Seth, having our own poker chips with our faces on them. Bobbleheads. We're going to have bobbleheads for all of us. We're going to sell them in sets for me, Mo, Seth, and Don. And Don's bobblehead will just be a black face, not blackface, but like a darked out, like no face really. Maybe like he's the Wizard of Oz. So we're not going to have anything for him. It'll just be funny to have that. So we're looking at doing that kind of stuff.
Paul, I was envisioning all of our blackface. You just said, David just said you're going to have Don in blackface. That'll go over well. Yeah, no, it's funny. I just realized that I keep envisioning like our faces on the merch and on the shorts, but our big head faces, those are the ones that are really that really make us famous. Those hilarious big heads. So, okay, guys, I love you. You guys are incredible. Paul, this is all great updates, folks. Just while we take a short break from the companies, I would say that we'll be filming our Tesla promo video next Friday, couple Fridays. One of our patrons is going to be filming it here in Cleveland. We are giving away 2 Teslas to our patrons this year, not our subscribers, our patrons. And so we'll be talking more about the Tesla giveaways this year. When we hit 50,000 subscribers and 100,000 subscribers, 2 of our patrons will be driving brand new Model 3s. And if you're in the States, you can come to Akron and we'll pick it out all together. It'll be wonderful. Okay.
Yeah, I've never met you, John Thiesing, face to face, so it's gonna be fun.
Yeah, John has some great ideas for the video, Paul. We're going to do some extreme Wayne's World style close-ups on your crotch and buttocks area, showing off your beautiful shorts that everyone's in love with. And so, yeah, who knew I got famous for this beard, and you and those frothy white butt cheeks that you're sporting on a daily basis. That's what you're famous for. So, All right, guys. Okay, let's get after the next company. Now, I'm certainly going to pronounce this one wrong. Sanofi ADR, Sanofi ADR. Sanofi, there you go. See, these spellings, these companies just come up with their own damn words. This is a French company founded in 1973. They are the global healthcare leader with 100,000 employees, 73 manufacturing sites in 32 countries, and they specialize in specialty care, vaccines, and consumer healthcare. Sanofi, Paul. Let's look at the Everything Money website and look at Sanofi.
Well, I actually can't. I actually cannot on Sanofi. I don't know why it's not popping up. It's probably the feed from the foreign numbers, but because we only have U.S. companies, I think. I don't know. Either way, I got to go to Y charts for this one, guys.
Go ahead, Paul.
$118 billion market cap, 10 PE. So check mark there, Seth.
Nice.
11.1% profit margin. So check mark there, and a dividend yield of 3.5% on 118 billion. Let's be conservative and call it $4 billion.
Great. I'm sorry. That dividend. Wow. Great. 3.5%. That's great, Paul. Okay. Pillar number 3 is revenue growth over the past 5 years.
So revenue growth the last 5 years. We have 37.4, 41.16. Check mark there.
Paul, I also feel empty without our sound effects. I mean, really empty about our Little John sound effects. I might have to add them like verbally here if it gets any worse. Okay, pillar number 4 is profit growth, my dear friend. Profit growth over the past 5 years. Wow, look at that.
5.2 billion to 14 billion. That's a check mark there.
Wow. Okay, wait, I do have a sound bite here. Okay, pillar number 5 is shares outstanding. We want the shares going down.
2.57 to 2.50. So check mark there.
Nice. Pillar number 6 is current assets over current liabilities for Sanofi.
41.56 versus 23.71. Check mark there. Awesome.
There it is.
We have a lot of check marks. We've had all check marks so far, haven't we?
Yes, we are 6 for 6, all check marks for Sanofi ADR. Pillar number 7 is free cash flow growth. We want this going up, Paul.
All right, so they don't have updated from 2020 free cash flow, but that's okay. We're going from 6.9. Oh, we lost 6.9 to 6.6. So there's an X there.
Dang. X on free cash flow. Does this worry you about this company?
No, X on free cash flow growth.
Growth, I'm sorry, yes.
Now the price of free cash flow, do you have a calculator out?
Yeah, I'm ready. Give me the middle 3 numbers.
Okay, 6.7, 6.1, 4.2.
Okay. The average free cash flow is 6.1.
Times 20 is 120 billion, and it's currently selling for 118 billion, which is a check mark there then.
Mm-hmm. Price to free cash flow, pillar number 8 is under 20.
Yep.
What do you think, Paul? What do you think?
So I think, again, with all drug companies, you need to understand what is the pipeline, what do they have expiring, what does their future look like? Because if they don't have a future in pipeline and they're losing drugs, you might as well kick them to the curb. So look at this one. I mean, take a look at it. It's selling below its all-time high. Its all-time high was like 55 or so. That's interesting, though, with such a low PE. That's interesting. Yeah. Oh, the dividend was 4 billion and their average was 6 billion or whatever it was. So, they're now granted, yeah, the bottom line is I don't know why drug companies have such a high dividend payout ratio relative to free cash flow. I don't know why that is, but either way, they like to pay out a big chunk of free cash flow to it.
Adrian's saying they retreated from cardiotherapy. That's why there's a drop in 2018, 2019. Dr. Dathy said that they're investing a lot of R&D, probably why there's a low free cash. Interesting. And Paul, look at this hilarious comment. Gary said, we just need a shirt of me picking my nose and saying I love you. That happens a lot on the show, guys. I mean, that's hilarious, Gary. I love you. And you know what it is? It's this silly mustache. I mean, this thing is all over my face. And I mean, it's a price to pay when you look this handsome. You know that, Paul. Moshe.
I want to answer Ben's comment. Can you put Ben's comment up there?
Yeah, is it this one? Here we go.
The low institutional ownership. Remember, Ben, I like a lot of companies that have high institutional ownership. I'm just sitting there saying that is not a huge factor to me. I don't care what others think of a company. I care about my own analysis. If there's low institutional ownership and I like the company, to me, that's not a bad thing. It's a good thing because it says that if my thesis is correct and I'm going to be right, and it's a big enough company that a lot of institutions will want to own in the future, then that's going to be awesome for me. Because then as they start to buy in, they're going to eat up a lot of shares and the price is going to get driven higher and higher and higher. So I'm looking at it as my own analysis tells me what I want to do. Remember, I was buying real estate in 2008 to 2010, and every institution, every bank in the world hated real estate. And I made tons of money. I don't care about institutions. They are just run by everyday people that don't have as much. They probably don't know as much as you guys do even. And I know you guys think that's crazy. The biggest misnomer in the world is that institutions, mutual funds are run by brilliant people. They are not. They are run by people who are trying to chase returns like everybody else. So I don't care about institutions and their ownership. But if I like a company that has low institutional ownership, awesome. But all I care about at the end of the day is a company selling for less than I think it's worth. That's it.
Yeah, we're going to head over to Trader Mo here in 1 second to look at momentum for this company. Again, this is Sanofi. How do you say it, Paul? Sanofi? What the heck?
Yeah, by the way, that's the way I always heard it as.
Sanofi.
Okay. Sanofi. Thanks, Mo. Yeah, my son Gio is saying we need custom Seth and Paul chessboards. That'd be hilarious. And yes, that's right.
Well, we did talk about that yesterday, and it was just hard to say. And then Mason said, "Well, Paul, obviously you'd be a pawn." That's what he said to me yesterday, and he's smiling now because he was so happy about that content.
Yeah, when we do live in studio episodes, folks, Don is the camera switcher. We have all those cinema cameras in the studio, and Don switches those, and he does switch over to me all the time, picking my nose. That happens a lot. Paul, Mo, are you there? Let's show us Sanofi ADR. Mo, what do you think about this company?
So this thing is really interesting. I'm seeing these big gaps all over the place, and it's not like it just happens every once in a while. It's pretty frequent. So what this means is that the stock price will close at one level, and then it'll jump up the next morning. So it'll close down here at, say, 48, jump up here to 50 in the next morning, and this happens quite often. And typically, when you do get these gaps between prices, the stock price typically does come down on you. So you can see that we jumped up, and then it took a couple weeks, but it came back down to almost that same level. So just from this perspective, I'm going to stay away from Sanofi just because it does that and there's better companies out there. Now, if you want to play this, make sure you're using stops. This is a company where you're going to want to use stops since they do have their stock price is a little erratic on a very consistent basis. We're coming through right here into the sweet spot. Let red cross over yellow if you want to do something with this. Wait for some good engulfing candlesticks and go for it. I'm going to assume that there's a lot of resistance with all of the moving averages that you're going to have to get through. So right now it's looking like this entire sector is a little bit difficult to trade right now. So might want to move on to something else, but that's a pretty general statement. So it's up to you. Just make sure you're using stops.
Thanks, Mo. Paul, how are you? Feeling good?
Yeah, I'm feeling good. I think a lot of the gaps have to do with the fact that it's lightly traded, Mo, because it is a European company, and I'm wondering how much of that has to do with it.
Yeah. So it's a never owned for new patrons or guys that don't know me. I used to do a lot in the pharmaceutical area, and I've never owned this company. And the reason was there was one specific drug that they started developing about 15 years ago, and Johnson & Johnson came on and tried to compete, basically making almost the same drug. Johnson & Johnson got it done within 4 years. Sanofi just got that drug approved last year after the 15th year. So I've never really cared for the management at Sanofi. So that's been a big reason why I've stayed away from them. That's just me going through a lot of these pharmaceutical companies and looking around. It's just never been something that I've been terribly interested in. So that's another thing. After you do your digging from your 500-foot view, that's when you're going to go in and look at different things of how they've done over the past decade, how their management is done, how they put their management together before you make an investment.
All right, guys, that was Sanofi ADR. Paul, I got another one here for you. This is off the Patreon request line.
I'm more interested in Zubin's comment. I'm here for reasonable, realistic conversation. You might want to get out like very soon because this is We talk about reasonable and realistic when it comes to investing, but we want to have fun and a chessboard. Okay, sorry, I got it wrong. Okay, gotcha.
You've come to the wrong place. How funny. All right, Paul, we have a couple companies. We have Vertex Pharmaceuticals, Bristol Myers Squibb, or Regeneron. Any of those sound sexy to you?
You know, I want to answer Jacob's comment. That's a really good question he asked. If you could post that, if you could post that on the screen.
Yeah, there you go.
Would you recommend an investor living outside of the U.S. to invest in U.S. stocks, their own nation's stock market? The reason I like this question so much is it goes back to something that was really hard for me to understand and do years ago. Focus on what you understand. If you're in a country that you can understand their company and their financials better, stick to that company. I like big European companies and U.S. companies. There are plenty of companies in these areas. I don't need to go much further out. But if you're in some obscure country outside, you might need to go out to get a better understanding, to get more opportunities for investment. But focus on what you understand and like, and then you'll do better as an investor if you do that.
Yeah, Paul, you are a little choppy, guys. We are broadcasting today. Paul is in his Mexico home in Manzanillo. Mo is there as well, and I'm in Ohio. So obviously the feed is getting a little choppy at times. But it's funny. We had this conversation last night, and we thought other shows, Jay Leno and Letterman, they went on vacation and ran reruns. So we're trying for you guys. And so if it's a little choppy, we appreciate you guys staying with us. We love you. We certainly know that. Paul, any other questions you see that you love in there that you want to answer?
No, everybody's making fun of my internet connection.
Yes, nothing says a millionaire mogul besides crappy internet. So yeah, okay. All right, guys. Okay. Let's see. Paul, I have some more companies. Like if you want to keep going, Vertex, Bristol Myers, Regeneron. People have said Innoviva, Biogen is always a hot topic. What do you think?
Well, first I want to answer. Somebody says, "Quit scratching your ear." I'm not scratching my ear. When I take a shower, when I get water in my right ear, if I don't pull it and make a crack, it hurts the rest of the day. So that's what I was doing right there. I started to feel it hurt. So I had to pull it and feel the pop, and then it goes away.
Yep, our patrons definitely needed that information, Paul. Let's look at, why don't we cut to the chase here? Biogen has been a huge topic. Do you want to look at Biogen one more time? I love this company. I own a ton of it, Paul.
Biogen's great financials. They are losing revenue soon, but they have a great pipeline. It's a long-term play. If you can afford to sell puts on it, $100 contracts at a time, $100 shares at a time in one contract, I would say do it at much lower levels. But there are issues in the short run, but long run, they have a lot of really great pipeline going. I think they're a check mark in every pillar. I'm not exactly sure. I don't want to go over it over and over again because we keep doing it, but okay. It's my favorite from a financial aspect.
Biogen. That was Biogen. All right, Paul, why don't we look at Innovia? Innovia. Innovia.
What? Innovia?
I don't have the ticker at the moment. I'm sorry. Give me a second.
Right here, INVA.
Yep, there you go. Thanks.
Okay, 1.23 billion. Let me just rattle through these stuff. 1.23 billion market cap, PE of 5.5. Check mark there. Profit margin of 66.63%. That seems weird. Maybe my numbers are off. Let's see.
Okay.
Revenue 133 to 336. Check mark there. Profit
growth
59.5 to 224. Check mark there. Jesus Christ, how do they have such... Hey, Mo, do you understand why they're... I mean, what the heck? How is there... That's incredible. Okay. Number of shares outstanding, 440 down to 405. Check mark there.
5 straight.
Let me make sure... Okay, so balance sheet, 572 million versus 3.9 million. Check mark there. Total liabilities, 387, so massive check mark. You have to take off $200 million from its market cap. So instead of being it's called $1 billion company. Free cash flow. Check mark there. 46.6 to 295. I mean, guys, this is obscene. What the hell is going on here? This is obscene.
All 8
Let me make
pillars.
sure this is... What was that, Seth?
Oh, it's not often we see all 8 pillars. I mean, it's great to see. Are you on Y charts now?
Yeah, I'm trying to make sure my numbers are right. Let me see. Financials. Annual annual. Yeah, it looks right. Wow, that's incredible. I mean, okay, guys, what's the catch here? Somebody tell me the catch here.
This is one of the ones where I would want to go and take a look at the pipeline and see what's going on, just to make sure everything's right.
The firm collaborates with and receives funding from GlaxoSmithKline, which is another plus here. I mean, the capital expenditure is zero, Bogdan. Did you see that? Yeah, exactly. I'm wondering if it's because of GlaxoSmithKline's the one that does it. I mean, what is their business model that developed antibiotic respiratory? Interesting. Late stage trials for asthma and chronic obstructive pulmonary disease. Debt level on this one's very low here, right?
COPD.
They have plenty of cash on hand to pay off all their debt. I mean, this is incredible. I don't know what to say here besides, I mean, geez, oh, Pete.
Yeah, guys, we're looking at Innoviva. This is a pharmaceutical company, Innoviva. The ticker symbol is INVA. Paul, you're a little stumped here.
Yeah, Adrian says the only negative I could find was that their prices are quite high. I assume you mean the prices for their drugs, Adrian. I assume that's what you mean, because that's pretty impressive. There are almost no analysts following this, one analyst rating total. That's interesting. I mean, it's a small company. It's $1 billion company, essentially. So, buy Paul never does. Wait, buy Paul never does it. What was that?
They're saying Gio wants you to buy this company right now.
No, I don't know about that. I love it when Paul's eyebrows high-five each other. Yes. Is that what I'm doing here? This is the next GME. I don't know about that. Yeah, so this is a company. How long have they been on the market? That's a great question. Let's look at their stock price. Yeah, they've been public since 2004. They went as high as $40-some a share. 43, 44. All right. I mean, guys, do your research on this one because these are pretty impressive numbers. I just don't know. You have to understand what their partnership is like with GlaxoSmithKline. Like, what is that partnership exactly like? And they just announced earnings just 2 weeks ago. You can find earnings insights, Q4 results, things like that. So go look at that. Let's see what Seeking Alpha has to say.
Mo,
do you want to look at momentum on this puppy?
Yeah, sure. This is I'm going to definitely go and look at their pipeline and talk to a few people. But this is another one of those 50% stocks. You have your high, you have your low, and it's kind of sitting in between. You can see that it's been running at this level for about 2 months, right in here, just consolidating, not really doing much. It actually made a sweet spot reversal here back in December, and it's trying to make another sweet spot reversal here in February. So, it's kind of sector wide that we're seeing this kind of boring trading. So if it's me, I'm just kind of ignoring the pharma sector right now perspective, but this company is definitely interesting from a value perspective. There's no doubt.
Yeah, Paul, people are freaking out about this one. Final thoughts on Innoviva.
Innoviva or something like that. Yeah, I mean, do more research on it. I mean, I have to sit there and understand. I mean, it's perplexing to me when things are too cheap without any negative news because they just beat earnings last year by a big chunk. So you just got to figure out. It'd be interesting to see what their partnership with GlaxoSmithKline is, like how much they rely on GXK, and how much do they? Yeah, because at the end of the day, if you're relying on one company and all of a sudden they go, yeah, we done here, then you have problems. So find out. 4 FDA-approved drugs. Max? Is that 4 drugs approved with Glaxo, or by on their own, and they just use Glaxo to help them out? How does that look?
Yeah, guys, that was Innoviva. Mason saying Innoviva to the moon, of course. All right, guys. Paul, we have some other questions. Some of them are very off topic. Didn't know if you want to get off topic a smidge, but we can. Dan says, how much should I consider currency risk when buying American stocks? What do you think about this?
Yeah, I mean, I don't really mess with currencies much. Currencies do fluctuate. It's just that's an issue I don't have to deal with because I mean it is an issue to deal with when you have companies that buy a lot foreign. I just believe in I still believe in buying a good company that has growing revenue, because at the end of the day, I don't want you guessing about currencies. I don't try to guess about currencies. I try to buy good companies, and currencies will fall where they fall. And hopefully 20 years from now, it's all worked itself out.
Paul, people are saying...
Can you pull up Chris's comment? Paul said that he has 90% cash in the minute.
Yeah, right here. Here you go.
Chris, you're 100% right. But remember, and I will answer this question the same as I've always have. I'm in a different position. I have 10 businesses. I have tons of real estate. I have multiple revenue streams. I can be out of the market for years and years and years and not make a dollar and still my net worth go up. In fact, the last 5 years, my net worth has gone up significantly with actually a short position in the stock market. So I've been losing money every year on my cash. So that's not for you guys, though. You guys should save for retirement, save every month, do it, not try to time the market. But I'm in a totally different position, and I'm very upfront about that. So do as I say in this situation, not as I do, because my position is very different. If we were in the same position, I did something different, I'd talk about it.
Yeah, Paul, you've shared that with me too. You know, I come to you with like, Paul, what do you think I should do? And we're just in different positions because, you know, I'm saving for retirement and you have a whole holdings company to worry about. So, Paul, there's some questions here I'd like you to get after. Dallin says thoughts on the market as a whole, overvalued inflation. Micro thoughts on
overpriced, massively overpriced.
Yeah, you've been saying that since
4 or 5 years now. Yeah, I've been saying that for a long time now. So
yeah,
who knows?
Paul, CCIV went up 23 to 30% today. Massive spike.
Oh, did it?
Yeah, just today it opened at
It's suspended now. Why is it suspended?
Yeah, it opened at 37. It was up to 30. I think now it's falling. Maybe it's not suspended. It seems like it's moving. But going back to why is every other channel talking about CCIV and you easily disregarded it so quickly? You know, just remind people your thoughts on this.
There's nothing behind it. I'm waiting for something behind it. They're reacting to a stock price going up. If that's what matters, it just doesn't make any sense to me. That's like saying when you go to the store, you only buy things that are selling in hot commodities where the price never goes down. It's like, I don't do that. I sit there and go, what are people overlooking and what's behind a company? Price is what you pay, value is what you get. On CCIV, if all you want to do is trade it, more power to you. Talk to Trader Mo, understand how to trade it, look at momentum, understand how to trade momentum and do that. But I'm a fundamental investor right here, right now. And I look fundamentally at CCIV and I don't see it. Doesn't mean you can't make money off CCIV. There is momentum ways to play that. If you join our Patreon, we're going to have momentum as a big part of it here this year. But right now, I'm going to be a big investor. I'm going to be a big momentum trader here soon. But in the meantime, fundamentals are what matter to me, and CCIV does not have that, in my opinion.
Yeah, we did a video on CCIV. Jordy's saying that the merger was announced with Lucid. We did that video last week. If you guys want to search it up, the point was I was asking Paul and what the hell is Lucid anyway? They also produce no cars. We were looking at hype stocks like Workhorse a couple weeks ago, who is trying to produce 5 cars a day. Paul is very much a fan of just letting these companies actually get successful and then buy into them at that point, as opposed to just talking about being successful. So, I guess the merger did indeed happen, or at least someone is saying, Jordy's saying, yeah. Great. Sound keeps breaking. All right, guys.
Matt Jensen. Matt Jensen, what a jerk. Paul's that guy who buys the regular Oreos because the double stuff costs 30% more. No, that's you, Matt. If the double stuff is actually double the cream, I'm paying for it. I like the double stuff, bro.
Paul, Sam has been asking, why is, let me pull it up here. Sam is asking, why is the PE of stocks different on different websites? That is true, Paul. That always sort of, is it just shifting so quickly you can't keep up with the feeds?
Yeah, maybe so. I mean, like our feed right now is end of day yesterday. We're going to be getting a live feed sometime this year. It could be because 15-minute delay versus real time. When you leave a website and then go to another one, the prices change. It affects the PE, it affects all that stuff. It just happens all the time.
Yeah, Bogdan. Thanks for your comment. We're working on it. Here you go, Paul. This is a good one. Dallin's also asking, you mentioned the GDX and a GDXJ a few videos ago. Any further thoughts on gold and silver? Paul, I actually have seen people on Facebook Marketplace. They're selling bars of silver or auctioning off bars of silver. What do you think about precious metals?
I don't know how to value them, but I like to look at the companies that actually refine them. and value them that way. And whenever I have an industry where I go, this is an interesting industry that I think is undervalued, I'd rather buy the ETF instead of, I want to be lazy. I want to do as little work as possible, get the information I want and make money. And GDXJ is an example of that. And GDX. I sat there and said, okay, gold is up a lot. The refineries are down a lot. There's got to be a disconnect here somewhere. Let me go buy the ETFs and make money as gold gets better and better. That's it. Guys, I'm just as lazy as everybody else in the world. I don't want to do work. I don't want to be like my friend Gary, who goes and interviews customers and ex-employees and goes to the CEOs up. And I don't want to do that. I want to make money as easily as possible. What I'm trying to teach you guys and through our website is this is going to be more information than anybody else is going to go through, but it's going to give you an idea of what's going on with the cash flow of the business. I want to do as little work as possible, but I still need to do some work. That's the issue. So there you go. That's been my idea behind it.
Yeah, again, Paul, we had another weekend of Bitcoin reaching record levels. Would you like to tell some of the new viewers your thoughts on Bitcoin one more time?
I just don't buy into it. I don't see what's behind it. At least with the US dollar, there's the US government and economy behind it. There's nothing behind Bitcoin besides what people's perception of the value is. I'd rather have you buy baseball cards. I'd literally rather have you go, instead of buying one Bitcoin, go buy $50,000 worth of rare baseball cards or Magic the Gathering cards.
Yeah, that's what I'm into. I would say, Paul, I finally had a friend who was super into Bitcoin, an enormous believer, basically sort of admit that, like, all this could be complete BS. No one has any idea what's actually going to happen in the future, and it could totally fall. Whereas years ago, people were just like, this is, each Bitcoin is going to be worth $1 million. So yeah, I'm with you, Paul. I was into it very deep for no reasons at all in terms of fundamentals or actually knowing what's going on. And I sold my Bitcoin on my show earlier in the year. So yeah.
And you regret it?
No, it's funny. I don't actually regret it. I mean, you have taught me about how not to be upset with a winner, and at the time I felt really great. It put a smile on my face and I feel pretty good. I'm glad I'm out of it.
Hey, you want to talk about you don't have to talk about exact numbers. You called me the other day before I left for Mexico about your Magic the Gathering cards and how you went and did the numbers and there was triple the amount of money you had in your Magic the Gathering value than you originally told me. You told me X and then you called me like, yeah, Paul, conservatively, and you gave me the number and it was over 3 times more than that number.
So yeah, folks, if you've been following along, I am a nerd. I mean, I have a PhD in chemistry, so I've been born a nerd for a while, but ish, and I was into this game Magic the Gathering, which has since exploded nowadays. I mean, the cards are always worth something, but yeah, Paul, I just sold a card on eBay. You guys can look it up. It's called a Beta Mox Emerald, and I just sold it for $4,700, Paul, on eBay on Sunday. So yeah, these cards are incredibly crazy valued, and the number of in my collection is quite scary and life-changing. So I'm actively trying to maybe sell some of these when they're very, very high, and not play the role of the FOMO role, Paul, of where's it going to go in the future. So
and Seth,
yes.
can you go to Mo real quick?
Yeah, Mo, go ahead. Where are you, Mo? Oh, I'm sorry. Here, Mo, go ahead, talk.
So I was looking into this in Innoviva. They focus on pulmonary meds and allergies, emphysema, and whatnot. So I texted my father, who's a physician, and I also sent out 3 other texts to 3 other doctors. My dad came back with, they have 3 great drugs right now. They're collecting royalties from them. So that's the partnership with GSK. GSK owns the drugs, and Innoviva collects royalties from those 3 drugs. So the big going to try to expand and get other drugs licensed, or are they going to kind of sit right here and wait? So this is where pipeline and seeing what they want to do in the future really comes into play.
Thanks, Mo. Yeah, Paul, now we started talking about Magic. I hate to get this off on a Magic collection, but yeah, David, I do have
everything money, Seth. Everything money, bro. That's part of money.
Well, yeah, I mean, yeah, guys, if you guys are into collecting baseball cards or other cards, I mean, it's definitely interesting. I think, Paul, you're not as obviously, you guys, the normal person would think that Magic the Gathering cards are something silly, or Pokemon cards. There was a huge craze this year, and people who collect things, Paul, almost always probably think that the value will just go up and up and up. You're a huge proponent that cycles may occur. And so, yeah, I'm just at a weird time with this where I could be making some great investments if I had more cash, and they're just kind of sitting in some cards. But Yeah. So I had David. I have like 100 dual lands. So it's an absurd amount of cash. I'm probably going to start looking to move it just because I think I can do more with it. Paul has taught me that I can do more with money than just hope that companies' stock prices will go up. I can put it in smart places, make options on it. And Paul, some of those contracts you wrote last week, which when you get home we'll have to reevaluate, but just really opened my eyes to the amount of money. I mean, I started my journey, Paul, reading Rich Dad Poor Dad, and the idea that someone who has more money you can make more moves. You can just the rich keep getting richer because they just can make more moves by having capital sit around. I think I'd like to try that. Move some capital out of a collection and maybe have it available to buy an 8 unit, which I lost out on, folks. So we're gonna go over the 8 unit that I put a bid in here in Akron, and I lost out on. We offered full cash and full ask, and still lost out on the property. But so Paul, so why don't we get to some questions here? Wow, they're just flying in, guys. We love you. Guys, it's past 2. I like the fact that we're a Dark Knight saying, can we look at Biogen in terms of momentum? Mo, can you look up Biogen real quick?
Sure, I can do that.
Yeah.
So we got.
And Goldie Goldie said that he bought the Turtle Trader book, Paul. You're a big fan of that.
Oh, great. That's
Nice.
awesome. Good for you. It is a great listen, isn't it? It really motivated me. It really spoke to me immediately about momentum trading and how I really like systems and just sticking with a system. And I cannot wait to get started. I was just talking to our developer about this stuff because I really want to get started on. I'm really glad that I'm spending a little bit of cash on my new house renovation. But once that's done and I have my pile of cash for my personal account, I'm going to use that for momentum trading. I'm super excited about it because you can make money in up and down markets. But again, you got to be careful about that. And I think you have to start with a 6-figure amount to really do momentum trading. But I'm excited about it. I'm super, super stoked about it.
Mo, you ready?
Yeah.
So this is Biogen, folks. This is momentum on Biogen.
So this is the past 6 months. First thing that I noticed, there's a big bid and ask difference right here. That typically tells me that there's some kind of manipulation going on between the market maker, which is the ask price, and the bid, which is the price that people want to pay. Now, granted, I usually like to see this number between 1 and 2 cents. Granted, this is a $200, almost $300 stock, so you can go a little bit higher, but okay, for now, this thing has just kind of hung in this range for quite some time. We have a little sweet spot reversal right now. If you want to play this stock, you can throw a tracker share on there short right now if you want, but there's some big news that's going to be coming out of Biogen soon. So if you do go short on it, but frankly, if you go short or long on it, make sure you're playing stops on Biogen. You can see that Biogen always has big days often. It has gap ups here. It has gap ups. It has a big gap down here. So just make sure that you're playing stops if you're using Biogen. But right now, technically, the trend is down. So if you want to do something, you could throw a tracker share on short. Honestly, you could throw a tracker share on long if you wanted to and see what happens. This thing is very news driven. So that's something very important that you need to know about Biogen.
All right, Paul, what do you think, baby?
I think this has been a great show, and I love the questions we get asked. Like, I really think that it's shifting more to answering questions and just analysis, because I think we get a lot of questions that are great.
Yeah, guys, give us some feedback out there. We always are open to feedback, guys. There are other channels. Paul and I have discussed there are other channels that just go live and sit and chat for 3-4 hours, and so we almost thought about doing that today a bit if if the Mexico internet was going to be broken down. I have done some Patreon. I've done one Patreon live chat with just me talking to you guys, and I enjoyed it. I want to do more of those. The patrons do get a live video every single month from the 3 of us where we can ask any questions, and it's a little more laid back. We definitely drink and curse a little bit. Great, Paul. I gotta stop saying as much. Somebody called me. I agree.
Yeah.
I know. I know. I'm gonna work on that.
Yeah. Hey, Zach, I don't ever get in the sun when I'm out here. I mean, we're going to take a couple of walks here. But Mason, let's talk about merch intern Mason. He was a little cocky. He thought he could take on the sun, and he was pretty burnt. His entire right side of the body was complete red, like a lobster. It was incredible. Yeah, he was like, yeah, I think I'm gonna take on the Sun and win, and the Sun won, of course, and he's been taking this aloe, which we don't even know if it was aloe or not, but the bottom line is Mason is currently getting better, and we're praying for him, right, Mace? Idiot.
Yeah, Paul, I will do a Patreon only magic tour like we did. Patrons seem to love your watch tour, Paul, showing off all your watches. So
you should do the magic tour. That's a good idea.
Yeah, it's interesting. Sam asked, how do you find out which apps to trade? Which ones do you like? Paul, we have a Schwab link below where if you sign up, you get money. We have not been the ones like Paul, like every other YouTube page that pushing the Weeble and the Robinhood. You refuse to do that. Tell people why.
Robinhood's getting in trouble now. I just felt like it made investing a game. There are ways to make investing a game in terms of day trading, chart reading, momentum. That's the game I want you playing, not actually, making it like an actual video game. It's just, guys, the thing that people have to understand is there's so many ways to make money. If your personality is set fundamentals, make money in fundamentals. We do that. If your personality is chart reading, do charts. We do that. Mo does that. If your ideas are momentum, we're going to be doing that. There's so many ways to make money. I always tell Seth, when he called me about his Magic the Gathering cards the other day, he's like, Paul, what if I just sold all of them? I go, why? I go, you enjoy it. Go sell a chunk of them, get your money back, and go keep doing it with the other ones you have. If you lose all that money, you already got your profit. Just do what you enjoy and figure out a way to make money with a system, though. I'm trying to teach system, process. All these things are part of it. Whether the system and process has to do with fundamentals, trading, charts, and momentum, it doesn't matter. Find your process, find what speaks to you. You will make a lot of money. Trust me on this one. Don't worry about what others are doing. Find the ones that are doing what appeals to you. When I read Turtle Trader, immediately I was like, this is for me. Immediately. I hired somebody to teach me charts. I fell asleep like this every single time. I was like, this sucks. I hated it. That's the way it is. I wasn't a chart guy. Mo loves charts. It works for him. He's been doing it successfully for years. Go listen to him. But you have to do what makes sense to you. If you're coming here to learn about NIO and Tesla, more power to you. We'll learn about the charts, the momentum of them, not the fundamentals. So the fundamentals are garbage. That's the way I have to say.
Paul, Louise is saying, I'm looking for a starter course. I assume on investing. What would you recommend? Louise, we've been doing videos for a long, long time, over almost 2.5 years now. And you can hear Paul, I pulled up, it's hilarious, guys. I pulled up videos of Paul. Paul, you don't know this, but I put them on. I'm going to release them to the Patreon group. And they're videos we recorded in the fall of 2018. There was no COVID. There was no crash. And every word that you're saying today is a verbatim reflection of what you were saying years ago. At least you're consistent, my friend, because you will not waver on your ideas about how and what to invest in.
I would rather lose every subscriber if I really feel like I'm right. And the only thing that changes what I believe is fundamentals change. And we're so far from value and price right now that it would take the economy essentially doubling in size for me to believe that the market is currently fairly valued. That's what if we were like 10% over, I could find lots of value. I'd be fine. 10% over, we're double. So guys, just keep that in mind. I love it. I love teaching. I love helping. We love it in the chat. People talk to us about real estate. It's a wonderful Patreon. It's a wonderful Discord, and it's going to keep growing. And my primary focus is going to be Discord and our patrons because the software is going to be awesome.
Tim said he's gotten off the hype train of hype investments. Tim, I hope you're sleeping better at night. I had to learn this the hard way as well about not listening to all my friends who are saying buy this and buy that and really sticking to some companies that no one else has ever really heard of. And so that's where we've made some great money, including a lot of the companies, Paul, as we did last week with the little book that beats the market. Some of those amazing companies are up 100% in the last 8 months. It's quite incredible. Paul,
great question from Zach. I want to answer this question from Zach. It's a good question. I have to go soon. Alex, go to luxuryzlo.com. But Zach, I don't worry about presidents because I believe the U.S. government's too big and too much of a train that it's not really going to affect things much. Do I believe that tax policy hurts? Yeah, but our tax policy right now is arguing about should the top bracket pay 39%, 35%, 42%? I get worried if all of a sudden the tax brackets jumped to 70, 80, 90%, which it did in the 60s, 70s, and 80s. They were that high. So right now I'm not worried about these policies. Remember, all those rich Democrats don't want their taxes higher. all those rich Republicans don't want their taxes higher. It's all, everybody wants the exact same things. They just argue about it to get, AOC is now wearing $20,000 dresses to events, even though she believes in being the little guy and all that stuff. So either way, I don't really look at political policy that much with a country like ours. Does that mean it'll never change? No. It just means that right now I'm not worried about it.
All right, Paul, I'm sure you're a little tired after an hour or so straight talking. So we appreciate everyone out there. We love you. Your support this past year has been absurd. All the subscribers, all of the patrons, we see you on there talking on the Discord channel. And we're very humble, and we've seen a lot of lives being changed, Paul. I was talking to the Bearded Wonder, one of our dear patrons, and, I was trying to think, we're not the best thing since sliced bread, but Ben had a great comment. As you see, Paul, that a lot of our people watching our live streams, they're all learning more. The conversations are getting much deeper than what they used to be. We used to have people just jump in and say, do Tesla. And after saying it, over the course of 20, 30 videos, we're not. I love what you've taught me, Paul, in the last few years, and I'm glad the patrons are what you're teaching is resonating with them as well. So we love you guys.
We really enjoy it.
Yeah, we have so much in store for you guys. We thank Trader Mo for his insights. If you're in the middle Patreon tier, you can talk with him about day trading. And as always, Paul, we have to schedule our Patreon only live stream for this month. We'll give that to the patrons as well. So, all right, guys, we love you. Thanks for everything.
By the way.
Go ahead, Mo.
Seth, I'm doing, if you guys want to join the Mo's Muscles middle level, which is the $49, which you get all access to me, or Paul's Super Shorts, which is the highest level where you get access to Paul and myself. I'm going to be doing a shorting seminar this weekend, either Saturday or Sunday. It's going to be all dedicated to how to trade short on stock charts. So if you guys are interested in that kind of preparation into if we get some kind of pullback at it like we did in March or something, who knows, you'll be able to make money in a market like that just as well as you can in this one.
All right, guys. Thanks, Mo. Paul, thanks again. We'll see you guys on Thursday. And we appreciate all the support. You guys are incredible. We'll talk to you soon, guys. Thanks so much. You guys are awesome. See you guys.
Bye.
Bye, guys.